Very much for that. We'll come back to you in just a bit. Cipla is selling off. Those numbers don't look all that great. Miss on the margins, miss on the EBITDA as well. Profit is slightly above estimates, but that margin number at 21% is not looking 21.3%. That's not looking too good. And as Ekta's poll also alerts us, it's a distance from the high levels of around 26% that the company's done in the past. But it was expected to drop, but it's fallen even more, and that's why the stock has sold off. Profitability numbers look slightly ahead of the poll. Now we'll flash the US sales number when it comes out in the press release in just a bit. The expectation that one is working with is that you'll probably see a print around 230 million, which will be very similar to Q3. That's the US sales expectation. So let's see. But right now, yeah, the stock is selling off quite a bit. It's absolutely given up from 2%. Let's pull up the intraday chart as well from about a 2% high, which is where it was when the numbers came in. Now it's a straight vertical drop. The market's not liking what it has seen. Till we get our fundamental expert in on this, and we'll also get Ekta. Mitesh, you just want to quickly run us through levels. Cipla, was it of interest to you in the first place to begin with? And if not, then looking at the price drop right now, what are the levels you'd track?
See, as I said, I think most of the stocks, have gone through some kind of a negative crossovers on indicators and averages on the short-term and medium-term basis. Cipla falls in that category as well. It had a good rally and now is showing signs of correction. The first support is the April low of 1345, and we're not very far away from there. But I suspect that the 200 average, which is now at about 1295, 1300, that level should be tested.
Okay. Let's talk about Cipla and the kind of reaction, the negative reaction to the numbers. Ekta joins in. Ekta, a miss on the top line and margins?
Well, yes, I think it's probably the margins which have disappointed a little more. So they've come in at around 21%. This compares to 22.5% in terms of an expectation, and versus 26.5% that they did in the previous quarter. So the expectation was that, yes, you are going to see lower margins this time, but it's come in on the lower end of what the street was anticipating. In terms of revenue as well, I think it's come in at around a growth of 7.4% on a year-on-year basis. Street was anticipating around 9 to 10% growth this time. So I think the miss has come in terms of the revenue as well as in terms of the operational performance. But overall, you would have to say that is not a huge miss which has taken place. We need to wait by for the internals as well, because we have the US business, more statistics which are coming on your screen, which indicates that the other income is higher, and that's probably aided profitability as well. What will be crucial to assess is basically how the geographies have done specifically for them. So for example, whether the US sales have come in within that range of around $225 to $230 million, which is what the street was anticipating. I think those kind of details will be crucial to assess how the stock would react further. But as of now, it's reacting to this revenue as well as this margin miss which has come through.
Okay, we have Foram Parekh, who's a research analyst at Sharekhan, now joining in. Foram, what's been the biggest disappointment for you? As Ekta pointed out, is it the margins? And in terms of the details, what is it that you're awaiting?
Yeah, so Cipla numbers is a mixed bag for us because Q4 is a seasonally weaker quarter for the company, and therefore sales have come above our estimates. But as I see, employee cost and other expenses have gone up, which has kept a drag on the margins. Basically, we have seen in this quarter that other expenses have gone up because of higher R&D and higher sales and marketing expense, and this is across the industry, and which is there for Cipla as well. So therefore, I feel that it's a mixed bag of numbers, though I'm awaiting more numbers, more geographical numbers. But then it clearly shows that sales is above our estimates, which means US has performed good and Revlimid must have done good. But because it's the other expense led by R&D, which has dragged the margins down.
Well, the cut is getting deeper now, 2.5% gone on Cipla. Foram, how do the valuations stack up of Cipla versus its historical levels and peers?
So Cipla has been trading in a range of, 25, 27 on 2 years forward. But having said that, it is trading in it is trading in line with its historical mean. But we have other packs like Dr. Reddy's, which is quite attractively valued than Cipla, because we saw Cipla has run up quite a lot in the short run. But we are just awaiting for the numbers to see whether we can, re-rate the stock further.
Okay. All right. Thank you very much for joining in. Appreciate you giving us some perspective on this. That's a big drop underway on Cipla. Well, let's move on and welcome our next guest on the show. We have Prakash Diwan joining us in. Prakash, it's been all about really sharp result reactions the last couple of days, right? I mean, the Cipla falling off the cliff, this Polygap on the other side. Anything that's sort of, really stood out for you with respect to the Cipla numbers and the kind of disappointment that's playing out on the stock right now because of this margin miss?
So, Suzy, I'm not too sure whether margins at 21.3% should be really disappointing. Actually, the thing is the perspective vis-a-vis last quarter, which was a bumper quarter for them, that's what set expectations very high. But I don't think the African